a couple of housekeeping issues. Initially, I would ask if you aren't speaking, if you can mute yourself. During the pre-meeting, we had an issue with some echoes. So it would be helpful if you could mute yourself if you're not speaking. Additionally, I am going to be presenting, and it's going to be very boring if people don't have any questions. So if you have questions, I would encourage you to type them in the chat window. I have it here. If I don't understand the question, I might just ask you to unmute yourself so that we can discuss it. But the chat window would be the best way to identify if you have any questions initially. So moving on, why am I not? So again, my name is Matthew Morley. I'm doing this presentation on tax issues that a lot of cemeteries and churches and preschools encounter. My role at the conference is I am the conference attorney. In this role, I don't represent all of the local churches, but a lot of questions come up. So when different churches will receive a notice from a taxing authority or something along those lines, it often comes across my desk. So in some ways, I am uniquely positioned to know what sort of tax issues our local congregations are confronting. So I will fully admit that I am not an expert in tax law. Based on my role, I am a something of a generalist as far as attorneys are concerned. But I see a lot of the issues that local churches are having. I should also mention, I looked at the participation list at the beginning of this, and I noticed there are at least 2 other attorneys on this call and at least 1 CPA who's on the call. So, certainly I don't claim to be the exclusive source of knowledge on this. So if anyone has anything to chime in, feel free to do so. This is an outline up on the screen right now of what we're going to cover. We're going to cover the 501c3 designation, Pennsylvania sales tax exemptions, 990s. We're really going to hit these topics rather briefly. The real meat of the presentation is going to be in the discussion of property taxes, because that's where I see churches running into frequent issues and frankly, the most expensive issues, or the most costly issues. There are 3 different exemptions we'll discuss: the house of worship, places of burial, and institutions of purely public charity. And then if we have time, we will discuss what's called unrelated business income taxes. So to start things off, like I said, the first thing we're going to cover is the 501c3 group exemption. I'm always amazed at how many misconceptions there are around this, because the denomination has made it very easy. GCFA, back I believe in the 70s, applied for a group exemption that would cover all of our United Methodist churches, and it does. You can go online to this website. The URL is right here: gcfa.org, services, legal services, group ruling.
Should we be seeing that?
Sorry?
Should we be seeing something other than you?
Yeah, I'm sharing my screen. Do you not?
I'm not seeing anything but you.
Is anyone else encountering this issue?
No, we can.
I see your group.
No, I can see your screen.
We can see you. Is it possible for you to enlarge the screen?
Yes, please.
Enlarge the screen?
Enlarge the actual document that you're sharing. It's kind of small.
Do they, one thing, if you're trying to watch the full gallery, there's a bar in between there and a white line. If you're not familiar with that, if you slide that over, it reduces the size of the gallery that you see, but it increases the size of what he's sharing, what Matt's sharing. That can be very helpful.
It's still not large enough.
Understood.
So I don't expect you to be able to read. I mean, this is basically a screenshot of GCFA's website.
Mhm.
that you should go to. So the most important thing down here is just this link, right? GCFA.org, services, legal services, group rules. And you don't have to write this down. I will make sure that I email out a copy of these slides to everyone. I've got a list of, I think, 20 attendees that I can get this emailed out to. And actually, I see Dr. Foster, you joined us. We had a question earlier about whether the recording of this was going to be available. Is that going to be made available?
Yes, it is.
Okay.
It's at the top of your screen. It is recording.
I
Yes.
see it's recording. I just wasn't sure what the process was as far as making that available to participants.
I will make sure that Lindsay gets that to the participants.
Thank you.
Mhm.
I appreciate it. So, like I was saying earlier, GCFA makes this really easy. If you go to this website, you can easily enter your church's employer identification number or your preschool's identification number and see if it's included already in the group ruling. And if it's not, you can apply to have it included in the group ruling. We do have some churches that have gone out on their own and received their own 501c3 designation independent of the GCFA group ruling. To be honest, I don't know why they've done that. But they make it very easy if you're part of the United Methodist denomination to just be included in the GCFA group ruling. This is another one that's going to be hard for you to see, but I don't want you to actually see this form right here. So this is the sales tax exemption. This is a form, it's Rev 72 in Pennsylvania. Religious organizations like ours are not supposed to be paying sales tax. You can file this form on behalf of your local church. It's available online on the Department of Revenue's website. There are some requirements that you should easily meet. You're tax exempt under federal law, which if you're part of the group ruling, you are. That no part of your organization's net income is going to inherit to the benefit of any individual. And that your conduct must be primarily supported by funds solicited from membership. So for example, your congregation. But I also have to say, discussing this with the treasurer's office, I know a lot of churches just use the conference's sales tax exemption. So if you contact the conference's treasurer's office, you should be able to use their exemption if you have any vendors that are asking for this exemption certificate. Another issue that comes up with some frequency is whether you need to file a 990. So a 990 is the informational tax return that most nonprofits file. However, churches are by statute exempt from filing a 990. So let me just back up real quickly. I see a quick question on the 501c3 designation that came through. Does the church blanket 501c3 also cover the preschool or child care program that is housed in the church building? That's a good question. And unfortunately, I have to answer it with it depends. So some churches and some preschools or child care programs are going to be separately incorporated entities with their own EIN numbers and everything. And if that is the case, you're going to want to contact GCFA to make sure that that EIN number is included in the group ruling. If it is a part of the same entity, so if it's a ministry of the church that isn't separately incorporated, you should be able to, or it should automatically be included as part of that. But you want to be careful to be using, have your own EIN number in that situation for the preschool. You want it to all fall under the church's structure. So moving on to the 990, like I said earlier, the 990 is the informational return that churches do not need to file. However, there are some reasons why you might want to consider filing a 990 informational return. For one, potential donors will be able to find you in GuideStar and other databases. Similarly, if you have clients or members who use donor advised funds, oftentimes they will want to see a 990 or some other indication that this is in fact a 501c3 organization. And the way a lot of those verify that is by looking in GuideStar and looking at these databases. It can also make it a lot easier if one of your donors gets audited to prove that the church is in fact a 501c3 organization that is tax deductible, where donations are tax deductible. So I know some of our larger churches do file 990s, and it may be it's only an informational return, right? So it doesn't actually give rise to a tax liability. It's just extra paperwork. So it may make sense for our larger congregations, not some of the small ones. Additionally, you may be obligated to file what's called 990P if your church has unrelated business income. So this is something we're going to come back to later because this is a very complicated topic, unrelated business income. If you do have income that is unrelated to the purpose of the church or the preschool, you may need to file a 990P.
Quick sort of COVID-19 update, if you will. Anybody?
I'm sorry, I'm not sure if that's a question for me coming through or. I don't think so. Okay. So I'd like to move on to what I call the meat of this presentation, local property taxes. So these are your school district, county, municipal taxes. Because this is an area where we see local churches running into a lot of issues. And frankly, it's an area that is incredibly complicated. So I'm going to apologize in advance that I'm probably going to be a little bit tax geeky here because I find this area really interesting, but it is really, really not easy. So I'm going to go in and talk about the actual substantive law, but I'm also going to have some best practices, some takeaways. So if I get too geeky on the tax law side of things, I apologize, but I hope you all have some good takeaways for you as well. So in the local property taxes, a really important concept to understand is that taxation is the rule. Any exemption or exception under the law is construed very narrow. So that also means that the taxpayer bears the burden of proof that an exemption exists. So if you were to just go to court or go to your Board of Assessment Appeals and say, look, we're a church, give us our exemption or don't tax us, that's not going to be sufficient. You would have to actually go in and establish which exemption applies and that the criterion of that exemption are met in your case. It is not the township or county or school district solicitor's responsibility to prove that you are not entitled to an exemption. Another point that I wanted to just make is we're really talking about pure taxes here, right? We're not talking about assessments. Assessments are different. So sewer bills and stuff like that, you're still required to pay those, even if you have a property tax exemption. And then finally, just a word of warning. We're talking here about what the black letter law is. Its application across different jurisdictions, county lines, for example, can be very, very different. So for example, I know of a church that owns property, actually two different parsonages, one in Chester County. Let me actually just pause real quickly and just ask, if you haven't muted, can you please mute it? We're getting some background noise and some feedback. So if you aren't muted, please mute yourself.
Yeah, and Matt, specifically, I see Larry Turnbull Bull's thing coming up, and I see that there's two devices registered for Larry. Now, it may not be the same Larry, But if he's got two devices going on, that's a lot of echo that's probably in the background. So Larry, you've got to mute and maybe consider only being on one device, because at one point I thought it was actually that we were hearing something from another seminar about COVID-19 updates or something.
Okay. I also, there was also a question about rental income from a tenant. And I want to come back to that because I have a whole slide discussing rent and whether that requires filing a 990T. So we'll get to that, but I'm going to ignore the question for now. So I was saying application can be very inconsistent across jurisdictions. So we actually, I know of a church that has a parsonage in Chester County and a parsonage in Montgomery County, and it is taxed, it's non-exempt, so it's taxable in Chester County, but Montgomery County is not on after that parsonage there for taxes. So that's a very interesting situation where you have the exact same tax, and the fact that one from one county and one from another yields a different result as far as taxes are concerned. Oh, right. I did not want to forget to mention this before we move on. This may seem incredibly obvious, but never ignore notices from taxing authorities, especially if your church is in Philadelphia. Ignoring a problem obviously does not make it go away. But we had a situation with a lot of our churches in Philadelphia a few years back where they sent a notice out to all of their exempt organizations asking them to provide additional information. And then they included at the very bottom of it something that said, if you do not have or if you do not respond within X days, we assume you no longer want to pursue the exemption. And we had several churches in Philadelphia that either didn't get that or didn't reply to it, and it caused major issues because the city of Philadelphia removed them from their roles of exempt organizations. So, I mean, this is, like I said, it's an incredibly obvious point, but it's one that that we cannot emphasize enough. Unfortunately, Richard, I don't have the capability to mute all myself. Although it looks like somebody might have gone in and done that. I'm not the leader for purposes of Zoom, but I think someone got us. Excellent. Okay, so the authority or the Pennsylvania real estate tax exemption stems from the Pennsylvania Constitution. It's Article 8, Section 2. You've got it in front of you right here. And it says the General Assembly may, by law, exempt from taxation actual places of regularly stated religious worship, actual places of burial, when used or held by a person or organization deriving no private or corporate profit thereon. And I'm not going to read that, but then also institutions of purely public charity. Importantly, oops, I'm sorry, I got to go back here. Importantly, there's this word may here. So this constitutional standard is not the only aspect here. So if there was just the Constitution and no statutes from the General Assembly, nothing would be exempt, which yields, unfortunately, there's this two-part test. We have to say, is it constitutional that there's an exemption? And did the legislature actually pick up the ball and pass a exemption in addition to this constitutional permission for them to do so? I'd also point out here at the very bottom here, it says, but in the case of any real property tax exemptions, only that portion of real property of such institution which is actually and regularly used for the purposes of the institution. So this is the point we're going to come back to later, that just because your organization or your church may qualify, it doesn't necessarily mean that the entirety of the building or the entirety of the organization will qualify. So the first exemption I want to talk about is actual places of regularly stated religious worship. This, of course, means primarily houses of worship, the actual church building, the sanctuary, right? So it's all churches, meeting houses, or other actual places of regularly stated religious worship, with the ground thereto annexed necessary for the occupancy and enjoyment of same. So there is a lot of case law out there, and we're going to get into some of that case law in a little bit. But there's a lot of case law about what ground is necessary to enjoy the occupancy of that house of worship. The primary things that are absolutely included in that is ground necessary for ingress and egress. You got to be able to access the building, and light. So if you have 15 feet around the building that belongs to the church, that absolutely is also necessary to enjoy it, to make sure that somebody doesn't put up a giant McMansion next door. But 100 feet, 200 feet, that's where the law gets really murky here. So I want to get into discussing some of this case law because it is incredibly interesting to me. And there are a lot of really relevant cases out here. So the first point is that when looking at these cases, the primary purpose being worship is the most important point. So if you have a building or a sanctuary that is used for worship, that's the whole point of it. But you've got other groups that meet in the sanctuary or meet in your house of worship, that's not going to disqualify you automatically here. But it's the primary purpose that matters. Interesting, like I said before, parsonages are not exempt. There's no exemption in Pennsylvania for parsonages. And as I hinted at before, this is something that is not uniform in application from county to county. Montgomery County normally does not go against after parsonages, while Chester does. It really depends on the county you're in. And interestingly, we are one of the few states in the country that does not give parsonages an exemption. In fact, at some of the chancellor's meetings I've been at, I've gotten into arguments with Brent Hills, who's the general counsel for GCFEA, because he thinks that nationwide parsonages are exempt, and that's just not the case in Pennsylvania. And that, interestingly, you can see I've cited a 1911 case here, but it's actually been the case since about the 1860s that parsonages are not exempt. Parking lots. This is a big one as well. Parking lots can be exempt, but they're not always exempt. So they're only exempt if a church can prove that its parking lot is a reasonable necessity to the existence of the church itself. So unfortunately, what this can mean is that churches in rural areas and suburban areas with no street parking or public transit, oftentimes those are going to be exempt. But if you have a large parking lot in the city of Philadelphia, for example, where most of your congregation lives in the area and can get there by walking or public transit, then it's likely that the parking lot is not exempt and that the city of Philadelphia will be able to go after you, go after the parking lot to get it added to the tax rolls. Sextons and caretaker residents, they are not exempt. So if you have a caretaker that lives on the premises, that portion of your lot of the property where that sexton or caretaker resides should be taxable. It's not exempt, although this is one where there is some leeway, especially, let me say leeway in practice, not leeway in the law, because this is an area where, if it's a small portion of the property, a lot of counties would probably be likely to overlook it. But technically under the law, that would not be exempt. When a church building ceases to be used as an actual place of religious worship, the exemption ends. So this is actually an issue that the conference ran into when Parkside United Methodist Church closed. We had a hard time selling that for a while, and we helped it. And the borough, the taxing authority, basically took the position that because it was no longer being used as an actual place of worship, the conference was just holding on to it and trying to sell it, that it was in fact a taxable parcel. So you want to be careful if you do have space that has been used for worship and it's not being worshiped in, you're going to want to make sure to, at least as much as possible, continue worship throughout so that you don't face a claim that you're ceasing to use a space for worship. Outdoor spaces, this is of course very timely given COVID-19. They can be tax exempt, but they must meet the same standard of regularly stated religious worship. So you could just have a lot with no church building on it. And if you meet there every Sunday for worship, it's tax exempt. However, this case that's cited here, Four Quarters Interfaith Sanctuary of Earth Religion, this was an interesting case where there was about 90 acres that this organization was trying to claim as where they worshiped, that they worshiped on all 90 acres. And they also had a church building, mind you. And in this case, they held that, look, the congregation used this, but not just for worship. They had all sorts of outdoor sporting activities and stuff there, and it did not qualify under the house of worship exemption or the regularly stated religious worship exemption, even though they did baptisms in a river. That was held to be incidental use because the primary purpose, again, remember that's the primary purpose test of this space, was not for worship, but was really used for the congregation's other enjoyment. As I hinted at before, if there is a portion of a property that is exempt and a portion that is not exempt, it will be bifurcated, so to speak, or divided for purposes of taxes. So, a good example of this actually, one of the seminal cases above this actually was a United Methodist church that had 2 floors that was used for worship, but then the pastor lived on the 3rd floor. And in that case, it was held, even though it was the same building, that 3rd floor was taxable, whereas the rest was non-taxable. So it was, allocated that way for purposes of taxes. Another thing that you need to be worried about or aware of is that, let's say you buy an empty lot and you plan on building a church there at some point in the future. That's taxable, right? Because it's not yet a regularly stated religious worship or a place of regularly stated religious worship. So if you are planning some sort of expansion, you certainly want to, and you could, in theory, get around this by once a week holding a service on that empty lot where you're planning on expanding in the future. So there are ways to get around this, but if you're just holding a lot for some sort of future expansion, it's going to be taxable, or could be taxable, assuming that the authorities pursue that. Additionally, there's a exemption for certain income producing activities. So if you have a museum or gift shop, I'm not aware that many of our churches have gift shops, but to the extent that you have something that's really producing income, that portion would likely be non-exempt. Now, this is something that could probably be argued, especially if you have, for example, just a small gift shop or something set up where members can buy Bibles or shirts, or a polo shirt that says, Grove United Methodist or something along those lines. Since that's really connected to the worship, that's probably going to be okay. But if you have a larger shop, so for example, this case, in Ray Order of St. Paul, the first permit involved a shrine, a Catholic shrine with a gift shop. that, even though the shrine itself was tax exempt, the gift shop was not. So I think if you have a small gift shop, you're probably okay. But if you did have a larger one that was selling things that wasn't related to worship, so not Bibles, things like that, you could run into some sort of trouble here. So this is going to be an issue. Sorry, I'm seeing a question. Is there a time frame for when church is not used? Since we are in this pandemic and churches may not be used for worship, is there any worry for churches about time the church is not being used? That's a really interesting question. I hadn't thought about that. But I would suspect that there's not going to be an issue. I've not heard of any issues anyways. I mean, the fact is we'd all love to be in our churches worshiping. And in fact, a lot of the worship at a lot of churches, even if people aren't in there worshiping, the filming for the Zoom worship or whatever is still happening there. But I would have I don't think that there's any real risk in this situation. I mean, the blowback on a township or a taxing authority for trying to go after a church for not using its sanctuary during a public health crisis, where using the sanctuary could be, deemed to be, I don't want to say irresponsible, but dangerous. I've not heard of anything along those lines, but that's a really interesting point and not something I've thought of before. So, again, there's a question here about renting out the church's kitchen. I'm going to come to that in a second. Okay, I'll get to that. So, and actually that's the question right here. How does renting space to other organizations impact the exemption? So remember, right now, what we're talking about is the houses of worship exemption, right? So a short-term space agreement, likely not an issue because it doesn't change the primary purpose of the space. So if you rent a sanctuary out for weddings or let community group use worship facilities, it is not going to cause you to lose the tax exempt status. But long-term leases present a much bigger problem, right? So if you have a facility, for example, I know of a church that has a senior care center that rents out unused space, and the rest of the church, or the church doesn't use any of that space. So they're essentially renting a whole portion of the building to another organization. That's going to be really problematic here. That would probably cause that portion of the building to lose its exemption under the house of worship exemption. But we're going to see there's another exemption called the institutions of purely public charity exemption that would likely cover that situation. So just because it would fail under the house of worship exemption, or it does not necessarily mean it's going to be taxable, but you have to try to work it into a different exemption. Another question, would thrift shops, church bazaars for income driven through selling tables for vendors also be taxed? So it really depends. So if again, here we're talking specifically about the house of worship exemption. So this kind of actually falls under some of the other exemptions. But it really depends. So if you have a temporary sale, I know a lot of churches have sales once or twice a year and donate the proceeds. That's definitely not going to cause the church to lose the house of worship exemption, because again, it doesn't change the primary purpose. But if you were to have a permanent thrift shop set up, that very likely would cause it to lose the house of worship exemption. But again, there's this other exemption we're going to get to in a few minutes, the institutions of purely public charity, that this would likely fall under. So to answer the question, no, it would not, I don't think, make you lose the total exemption if you had a permanent fixture in there or a permanent thrift shop. But I think you'd have to look to a different exemption to justify it. So the next exemption that I want to cover is burial grounds. So this provides, so again, just the basic structure here is the Constitution says that the legislature may exempt burial grounds. So here is the legislature picking up the torch and saying, we are going to exempt burial grounds, and here are the circumstances that we will do it. So actual places of burial, including burial grounds, mausoleums, vaults, crypts, or other structures intended to hold or contain the bodies of the dead, when used or held by a person or organization deriving no private or corporate profit therefrom, and no substantial part of those activities consists of selling personal property in connection therewith. So I want to just focus real quickly on this last part. If your cemetery, whether it's separately incorporated or part of the church, also were to sell caskets or were to sell urns, that would be a problematic here, because then it's not just a burial ground. You have essentially you're operating a funeral home in some ways, or selling property. And in that case, it could cause the whole cemetery to lose its tax exempt status here. So just some of the limitations on this. So it is land in actual use as burial grounds or ready to accommodate burials that is exempt. Other property is not. So this is a very common situation for cemeteries, that they will have property that at some point they will develop if they have enough customers or demand for spots, but they haven't developed it yet, right? It's not been mowed, it's not been laid out. That property is taxable. It is only property that is ready to accommodate burials that's exempt. So this is a situation that if you do have a large cemetery and you've got areas that are not ready to accommodate burials, you're going to want to probably mow that and have it ready to accommodate burials, even if it's not, even if you don't necessarily have the demand there, because, this land can be worth a lot. I mean, there's obviously differences based on what real estate value is. But I think the concern here is that I know of several cemeteries that have held on to land for a period of time and then sold a portion of it off to developers and realized considerable profit from that. And, under, this appeal of Catasauqua School District case, I mean, the concern was you can't just hold on to this and not pay any taxes and then realize a large profit in the future by selling it off. But it also applies, even if you're not planning on selling it off in the future. So any undeveloped land, you're going to want to make sure it's ready to accommodate burials. Cemetery caretaker residences. So this is one I'm personally familiar with because I am on the cemetery board at Grove where I worship. And we actually had to take this before our local taxing authorities. So historically, these have been exempt. So if you look at cases from the 1940s and 50s, there are lines of cases showing that it's necessary to have somebody at the property to assist with funerals and to make sure that it's not being utilized for improper purposes, to make sure there aren't kids playing in the cemetery. However, the trend at the common pleas level, so in Pennsylvania, common pleas are our entry-level trial courts, right? The lowest courts, the lowest courts for this type of matter, we'll say. And the trend at the common pleas level is towards taxation. So there are several cases in the past 10 or 15 years where they've held that they're taxable, the caretaker's residence is taxable, but no appellate court decisions in 45 years. So this may be one where the law could be changing. They could, if this goes up to the Commonwealth Court, this could be reaffirmed in the future that they're exempt. But at this point, the trend at the lower courts is that they're taxable. So in my case, we ultimately decided it wasn't worth litigating. They did give us an exemption for that portion of the residence that we were using as a cemetery office, which we're going to get to. And they also gave us an exemption for a garage where we were storing cemetery equipment, like our tractor, our mower and everything, but the actual residence was not held to be exempt. So we didn't pursue it any further. Cemetery offices. Again, this is an interesting one. They are probably exempt, but the only major case on this issue was actually the In Re Order of St. Paul, the first permit case, which oddly enough was decided on the basis of regularly stated religious worship, which befuddles me and other attorneys because there was no religious worship in the in the cemetery office. I think that they probably should have done their analysis based on the burial grounds exception. But yeah, it's just one of those weird situations. But cemetery offices are probably exempt, but there's not really a case on point under the cemetery exception. Additionally, the statute on its very face says it only applies if there's no private profit. And this is interpreted very, the private property or private profit in here is interpreted very broadly. So if you, for example, so there's a well-known case out here where there was a nonprofit cemetery. The nonprofit cemetery was owned and, well, was run by a for-profit funeral home. It basically directed everybody to this cemetery. And in that case, even though the cemetery itself derived no profit, because the organization calling the shots is itself a for-profit entity. In that case, the cemetery was held not to be exempt. So they're really courts are really gonna look past, the incorporation. So if I incorporate the cemetery separately and make it a nonprofit solely so I don't get taxed on it, they're not going to accept it. There are two questions that came up here in the chat. Does the burial ground exemption also apply to the columbarium area of the church? So I'm not sure I understand the question 100%. Marion, do you want to unmute yourself and just tell me what your situation is? I'm specifically curious of whether the columbarium is in the cemetery property or is in, for example, an area of the church indoors.
It's in an area of the church indoors, and I'm guessing it's probably already covered under the first exemption. But I was just curious because we do have a separate columbarium
Yeah.
area.
Okay. Well, so definitely, if your columbarium is outdoors in part of a cemetery, it would definitely be covered. And I think if we look at the actual text of the statute here, where it mentions, it doesn't say columbarium, of course, but mausoleums, vaults, crypts, or structures intended to hold or contain bodies of the dead. I think definitely that falls under this exemption. So if you did have a case, or if for example, the taxing authorities were coming after you, I would not just say, look, we're a house of worship, we're an actual place of regularly stated worship. I would also argue, I would also cite this and say, look, to the extent that we don't worship in this section of the church, it is a actual place of burial, in that we have human remains in a columbarium, which is essentially a vault. So yeah, I think it would apply here.
Thank you. Thank you.
Excellent. So there's another question which doesn't really address taxes, but I'll comment on it here. Do you have guidance for how to go about incorporating a cemetery separate from the church? Should we incorporate the cemetery, and why? And then Roger added, how? So this is not a easy question. It seems like it should be. There are a lot of advantages to incorporation. You have essentially a liability shield between the two. So if, for example, there was a slip and fall in the cemetery and it was not covered by insurance for some reason, they would not be able to go after church assets. Similarly, if the church, let's say, were to go under, having a cemetery corporation, an incorporated cemetery can help protect the cemetery corporation and the cemetery and ensure that that continues even after the church, let's say, were to be closed or sold off. It can create a lot of headaches. I'm not going to lie. I mean, I serve on the board of an incorporated cemetery, and there are also challenges with it, some major challenges. And first and foremost is finding people to serve on the board of the cemetery. Because I'm not going to lie, it's not glamorous work. It really isn't. It's tough to find people to serve on the board of the cemetery, and frankly, it takes talent away from people who might be serving on trustees or church council or one of these other boards as well. Additionally, one of the challenges I've run into or we've run into is it creates friction where our interests are really aligned. I mean, there's always this concept with the cemetery board that I serve on that we're a separate entity, we're separate, and we, in some ways, we're always emphasizing our separateness because people don't always understand that. It creates issues that rather than, if the cemetery doesn't get mowed before Easter or before a holiday or something, instead of the pastor being able to call up the company, the mowing company, and says, get someone out here, or the trustees calling them up, there's always this, well, we'd have to talk to the cemetery board about it. And it does create some friction there. But there are a lot of advantages to it. And another advantage is housekeeping. I mean, cemeteries are supposed to have a perpetual care fund where they set aside 15% of all the proceeds from sales for the perpetual care of the cemetery. That can get complicated when their finances are intermingled with church finances. But when you've got a separate cemetery corporation where you're not drawing a salary from or anything along those lines, pretty much the bank account is perpetual care fund. Because the only thing, so the way we've got it set up is the only thing we can spend money, besides money we immediately receive from funerals to pay the excavators, can only be used for the perpetual care of the cemetery. So it does, I think, create a nice separation there. As far as how to incorporate them separately, it's really not that difficult. There's a articles of incorporation form that you can file with the Pennsylvania Department of State. There is a you're going to want to also, and you talk to me about it. I've got a sample articles of incorporation I could give you in that situation. But it's really not that difficult. I mean, you need to get an EIN, you need to incorporate with the Department of State, so provide them with articles of incorporation, get separate bank accounts. If you have an employee, you're probably going to want to have to engage a vendor so that you're not having to file the monthly or quarterly tax reports and everything. But it's not that difficult. So I had the impression that the perpetual care fund may not apply to church-owned cemeteries. That's true, but you have to be very careful looking at them because there are dates involved in there as well. So if the cemetery was created prior to a current date or prior to, well, I'm sorry, the cemetery or church was incorporated prior to a certain date, it likely wouldn't apply, but it's not a blanket rule that no church-owned cemeteries are subject to those rules. But I would say even if your church isn't subject to those rules, you should definitely have a perpetual care fund for purposes of stewardship. Because if you're not setting aside money, what are you going to do when the last grave is filled? How is it going to be cared for? You really need to have a plan. And frankly, the 15% that's required under the statute is probably not enough. So just to kind of summarize, just to kind of summarize, use the space you have. Again, if you have a lot of extra space, your taxing authority might try to come after you if it's not ready to accommodate burials. If you have office space, make sure it is in or near the cemetery, or if there's a church, put it there. If you own property that is not contiguous or part of the cemetery, I think that's going to be a lot more likely to raise eyebrows with your tax authority. Again, the caretaker residence may be taxable, but the law on that's really murky. And additionally, to avoid this private profit motive, you're going to want to make sure that all contracts you have are arm's length transactions. So if you've got an excavation company, make sure you're shopping that around. Make sure that it's not looking like it's some sort of sweetheart deal where they are sitting on your board and manipulating things. Similarly with funeral home directors, and this is an area where it's a little bit. There's actually a trend recently for funeral home directors to sit on the boards of cemeteries, and I think that's a dangerous precedent, at least here for the taxing authority. Is if you do have a funeral home director who does sit on your cemetery board, you're going to want to make sure the minutes reflect them recusing themselves from a lot of decisions, because if they are making decisions, I mean, it really could look like they're manipulating things to their own private profit, which again, that could be problematic if that comes to light. Again, I don't think it's going to be an issue. I mean, it's not like immediately you put someone on your board, the taxing authority is going to come knock on your door and say, hey, it's taxable. But 5-10 years down the line, it could certainly cause an issue. Any other questions on cemeteries before I move on? Okay. So this third exception, believe it or not, is probably the most murky. It's institutions of purely public charity. So the legislature passed this, again, took up the torch and said that the Constitution says we can do this. So we are passing a law that says real property owned by an institution of purely public charity, used and occupied partly by such owner or owners, and partly by other institutions of purely public charity, and necessary for the occupancy and enjoyment of such institutions so using it, are exempt. So there are a couple of nuances here. The first is it's got to be used and occupied, right? So if I have a institution, if I have, let's say, a preschool, and let's just put it now it qualifies, and the preschool owns another facility that it doesn't actually occupy or use, it's not going to qualify here. It's only if the property is used and occupied by the owner. Again, it has to be an institution of purely public charity, and we're going to get into what that means. And it has to be necessary for the occupancy and enjoyment of such institutions. So again, this gets into, well, how much land do you really need around it for ingress and egress and to get light? But it does have to be necessary, right? So you can't just hold property just because it's owned and occupied does not necessarily make it exempt. So there is more so than with the other one. There is a constitutional standard that needs to be met and a statutory standard that has to be met. And we'll get into the reason for that in a minute. But first, I want to focus on the constitutional standard. So this is known as the HUP test, right? It's named for a case, the Hospital Utilization Project, which is Commonwealth, a 1985 decision of the Pennsylvania Supreme Court that says in order to be exempt, you have to advance a charitable purpose, you have to donate or render gratuitously a substantial portion of services, it benefits a substantial and indefinite class of persons who are legitimate subjects of charity, it relieves the government of some of its burden, and it has to operate entirely free from the private profit motive. So again, each of these criterion have to be met. And it's a totality of the circumstances test. So there's no, wish I could tell you there's a really easy smoking gun that's going to make sure that your preschool or other organization meets this exemption, but there is no smoking gun. They're going to look at the entire case. They're going to look at all the facts and circumstances. I've highlighted here this donate or renders gratuitously a substantial portion of its services, because this is where a lot of organizations fail. This is where, for example, preschools often fail. So this is the leading case on preschools right now. I should point out that it's what's considered a non-precedential decision, which means that a court is not required to follow this, but it is a very good example of how the Commonwealth Court, which is the intermediate appellate court, is going to handle these cases in the future. So in this case, it was a child care center that also offered preschool services. It argued that it donated services because they did have some individuals that did not pay 100%. But the Commonwealth Court focused on the fact that it failed to demonstrate that it contributes any funding to make up the difference, or in any way faces any financial risk or to offer its services. So essentially what they found here, and I'm not going to read this whole thing to you, it'll be in the slides, which I'll provide later. But in this situation, they found that because the tuition payments of their full freight students more than covered the discounted rate that they were offering to other individuals, that they were not rendering services gratuitously. Therefore, they failed the HUP test and were subject to taxation through real estate taxes. So this is kind of complicated, but one of the takeaways we're going to get to in a minute here is essentially anytime you're going to want to offer discounts, you're going to want to offer, have a significant portion of your individuals at the preschool receiving sliding scale rates or having 100% tuition free. And you're also going to want to do fundraising for them, right? So you're going to want to do fundraisers for this to help cover that. Because again, in this case, the fact that the other students' tuition made up for the difference was very important to the Commonwealth Court. So you're going to want to fundraise to help cover that shortfall. And I'm sorry, this is probably where I'm getting a little bit too legal geeky or tax geeky. So why is there also a statutory standard here? So in the 1970s, the Pennsylvania legislature thought that it was really difficult to figure out what an institution of purely public charity is. So they defined it in what they called the Institution of Purely Public Charity Act. So you can see here, I've quoted from it, that it was the intention of the General Assembly to eliminate inconsistent application and reduce confusion by providing standards on how to define institutions of purely public charity. However, the Pennsylvania Supreme Court disagreed. And they said that essentially that what the legislature actually did in creating this definition under the statute of a purely public charity is they essentially created another hurdle that institutions have to pass through, where instead of actually clarifying the constitutional standard, there's now a constitutional standard of what a institution of a purely public charity is. And now there's also a statutory standard. So anyone that wants to qualify for the exemption actually has to meet both standards. So this is a situation where, the really good intention of the Pennsylvania legislature to make things easier actually made it considerably harder for our organizations. So the statutory standard here, hold on. Sorry, I'm just seeing a question come in. Oh, Steve. Okay, so if a church converts some of its real estate from a tax exempt to a non-exempt purpose, To whom should the conversion be reported? Is there a legal obligation to do so? I'm going to answer this a little bit backwards. So, is there a legal obligation to do so? I don't know for sure if there is a legal obligation to do so, but if you're wanting to take advantage of the tax benefits, which you should, you're definitely going to want to notify the taxing authority, which is generally the Board of Assessment Appeals. It differs somewhat county by county, but that's generally who it is. And there's normally an application directly on their website on how to file that. But yeah, whether there's a legal obligation to do so, I don't know for sure, but certainly if you're going to be making the argument that this is exempt and you don't want to be, pay real estate taxes on it any longer, you absolutely should notify them as soon as possible, because I think that it's going to be likely that, if a court is reviewing this, or at least the Board of Assessment Appeals, which is where you take it before you take it to the court, that they are very likely to fix when that exemption comes off with when they are provided notice. Oh, converting. Okay, did I read that incorrectly? Okay, I'm sorry, Steve. So from exempt to non-exempt purpose. So if you are converting property from exempt to non-exempt, I would argue that there is no necessarily legal burden to provide that. And the reason why I'd say there's no legal burden is because look at these tests, right? You look at these tests and you could give, depending on what it's being converted to, you could give it to a room full of attorneys and CPAs, and they could all come up with somewhat different answers on that, on whether it's taxable or non-taxable. Certainly I'd say you don't want to lie. And if it's an incredibly clear case of going from non-taxable to taxable, I would say you definitely should notify the taxing authority. But I don't, so many of these are gray area type cases that I would have a hard time recommending that you contact the taxing authority on them, because you're probably just causing trouble where there doesn't really need to be any, because it's a gray area. But again, if it's a very clear case where it's taxable, you probably should. And Steve, I'd be interested in your thoughts, because Steve's one of the CPAs in the audience. So I don't know if he's got a different answer on that, but
I don't have a better answer. And I mean, I've argued some things different ways. I mean, way back when I was at a church that converted a youth house to use for the sexton.
Mhm.
And even then, that was his pay. So is that really a non-charitable purpose when that is his compensation? How he reports it, that's a whole different issue. So my main question was, like, is somebody going to go to jail if they don't report it, and the Board of Assessment comes along and later says, well, you're really operating a thrift store here, so we want to tax it, that type of thing.
Got it. I don't think anyone's going to jail over this initially. I mean, the worst case scenario, I think, in that situation is that you could be, faced with retro taxes going back to the date of conversion, and there probably could be some penalties with that. But I mean, I gotta say, I mean, especially even in counties like Chester County, they're pretty lax on some of those issues as far as retro and everything. Just from they know the image of going after a church is not something that they want. Philadelphia might be another story. Philadelphia has been really aggressive at going after churches and other organizations. But I really, like I said, no one's going to jail over it, I don't think, Steve.
Well, I just as an example, I did some work for a homeless shelter in the city of Coatesville. And they opened some transitional housing, which was rental housing. And we went to the county assessment and got it successfully taken off the rolls, even though it was generating profit, because the underlying fact was that the money went to the program and to the not to the tax exempt purpose, and the Board of Assessment did grant that exception. So I think one of the gray areas from my experience, I'm not staking my license on this, is sort of also like, where's the money going from this allegedly?
Well, that's a really good point to bring up, is generating revenue doesn't necessarily mean it's going to be taxable. It's generally the private profit motive that can cause it to become, and you know, if you are getting revenue and you know, putting all of that revenue towards program expenses or developing additional programs, that's unlikely to cause a taxation or make it taxable. It's really the private profit motive, and that it's going to the benefit of an individual or a corporation. It's not revenue itself that causes an issue, but that can be harder to explain than just we don't make any money.
I think my personal editorial view of it is that churches shouldn't necessarily panic if some of the uses are changing a bit, unless they are in the city of Philadelphia, in which case all bets are off.
Excellent. Okay.
Thank you, Matt.
Yeah, of course. So I do want to highlight this no private profit motive, because again, this is where a lot of our organizations seem to fall short. So there's actually, in the statute, there are criterion here. So again, this is one where you have to meet all of the criterion. So the net earnings or donations shouldn't inure to the benefit of private shareholders, which generally churches, preschools, that won't be the case. The institution applies all reserves, applies or reserves all revenue, including contributions in excess of expenses, furtherance of the charitable purpose. So again, in the case of a cemetery, and I realize that's not what we're expecting here, but we talked about, or what we're discussing here, but we talked about a perpetual care fund or setting funds aside for the future. That's not necessarily going to jeopardize this, just because you're setting it aside, as long as that is only used for charitable purposes or earmarked for charitable purposes in the future. The third item, the third part of the test, compensation, including benefits of any director, officer, or employee, is not based primarily on the financial performance of the institution. So I'm going to come back to this because this is an important one. And then finally, this test is number 4 here. I don't think any of our organizations would have trouble, but essentially the governing body has adopted as part of the Articles of Incorporation that any surplus funds may not be used for private purposes. They can't benefit any individual. And I can tell you, or I'm sorry, any private individual, right? In the event of a sale or dissolution of the institution of purely public charity. So this is one, your Articles of Incorporation should have this in there. If you follow the standard Articles of Incorporation that, for example, GCFA has, this is going to be in there. And if it's not, that you should consider amending them to include a statement to this effect. But the primary area, I think, especially our preschools, have trouble is this compensation, including benefits of any director, officer, or employee, is not based primarily upon financial performance of the institution. So if you actually drop down to this third bullet here on best practices, so for example, if you have a preschool director, and this makes some sense, that if you say, look, if you get 200 people in the preschool, we're going to give you a bonus. that seems like a perfectly reasonable solution. However, I think that runs afoul with number 3 here. Now, you could argue if you're basing it on number of students versus financial performance, maybe that's not going to be quite the same thing, but those two are linked. Obviously, attendance at a preschool is completely involved with how many students sign on. Additionally, this isn't expressly in there, but there are cases. There was a case not too long ago where it was a nonprofit hospital that paid its doctors very, very, very well. In that case, they actually held that because some of the doctors that actually sat on the board were paid so well that part of the test was not met. Essentially, that even it wasn't exactly that it was performance based or that based on the revenue of the organization. It was because they had employees that were paid so well that they failed this test. Of course, in the context of a preschool, I can't tell you for sure what you should pay your preschool directors or anything along those lines, because these are facts and circumstances tests, right? They look at the whole picture. But that is certainly something to be aware of. That you absolutely want to avoid performance-based or payment that's based on the performance of the organization as a whole. And you should also avoid anything that's way out of line with what other individuals are being paid. Additionally, in order to meet that test, the HUP test, to make sure that you are in fact rendering services gratuitously, you should try to render financial assistance to at least 20% of students, or have 5% that are on full scholarships, essentially. Additionally, as we learned in that Good Shepherd child care case, we want to make sure that if you are offering scholarships, which you should be, that you fundraise for that it's not being paid, just covered by the tuition paid by other students. You need to have the some skin in the game, so to speak, right? That whether it's fundraising, whether it's funds donated by the church or something along those lines, it's got to be. It can't just be offset by private or by the full tuition students. There's a question here. Do bonuses to sexton or church secretary in a non-preschool regular church situation affect exempt status? So they would not, with regard to the secretary of a church. Remember that the church secretary that we're dealing with, it's based on house of worship exemption. So that would not jeopardize a house of worship exemption. It could jeopardize a purely public charity exemption. However, it's unlikely. I mean, just paying a bonus itself is not going to be problematic. Paying a bonus that is somehow tied to having an exceptionally good year, or saying that, if we exceed certain benchmarks, you're going to get this type of bonus, would be problematic. But no, I mean, the fact is, giving a bonus is not by itself going to, and I think we could easily argue, look, this bonus that we gave to the secretary of the church this year was based on personal performance. She did very well at, or he or she did very well at hitting X, Y, and Z thresholds that are completely unrelated to, giving that the church received. So no, I don't think so. You just have to be a little bit careful with how you word that, would be my thinking. Again, I want to come back to this renting space, because this is something a lot of our churches and other organizations do. So renting space does not automatically jeopardize this exemption. If you remember with the house of worship one, I said long-term leases could be problematic under that exemption, but we're going to talk about other exemptions here. So best practices though, if we go back, I'm not going to scroll up here, but if you recall, they have to be owner occupied, which we talked about. But they also have to be occupied by other institutions of purely public charity. So renting to an organization that's a for-profit entity, that can be problematic. That could cause you to lose the exemption. As I said before, it has to be owner occupied. And it has to be actually occupied. So there's this appeal of the Archdiocese of Philadelphia, where they had a community center that they were leasing out, and there was a garage in which the Archdiocese parked their bus. And in that situation, they held that parking your bus there was not a sufficient amount, or it was not a sufficient contact, so to speak, sufficient use to justify the exemption there. However, in a subsequent case where the Archdiocese had offices in a building and rented out to other charities, purely public charities, in that case, the Archdiocese offices in that building was considered sufficient. So you want to make sure that you are substantially using. It can't just be incidental or a small use, so to speak, like parking your bus. And interestingly enough, that other case that I was talking about regarding the Archdiocese of Philadelphia, the Commonwealth Court in that rested their opinion on the fact that those other organizations were, and I quote, recipient of the Archdiocese bounty, and that the Archdiocese was recovering some of the costs, but they weren't. They were still subsidizing these organizations to a certain effect. So I think it's important. I mean, even if you are receiving rent from these organizations that you're renting to, that cover most of your day-to-day costs, I don't think that's going to automatically mean that you're taxable, but you want to make sure to document what some of the long-term costs are. Depreciation on the building, what type of insurance that you have, to really show that you're not making a profit on these. Again, profit, not revenue, right? To Steve and my earlier conversation, you can get revenue, but if you're renting this out and profiting from it and not really providing any sort of subsidy to these organizations, then I think you're going to run into trouble and it's going to become taxable. Any questions on this? So just to kind of summarize, before I move on to the unrelated business income tax, there are three exceptions. The first is places of regularly stated actual worship. The second is burial grounds. And the third is institutions of purely public charity. I think most of our churches are going to want to claim it both 1 and 2, because both 1 and 3. I mean, if you've got a cemetery, you would obviously want to base your exemption on the cemetery exemption, but most of our churches have some sort of long-term tenant in there. A lot of them are actually operating as community centers in a lot of ways. Because of that, they should really be looking to qualify under the institutions of purely public charity. So moving on, unrelated business income tax. So this is an issue. Remember at the very beginning when I talked about 990s, whether you had to file 990s, the answer is generally no. But if you have more than $1,000 of unrelated business income, you definitely could be required to file a 990T and pay taxes on that unrelated business income. So again, the definition of unrelated business income is income produces activities unrelated to the tax exempt purpose of the nonprofit or church. So that brings up a question of how about a preschool? Is a preschool unrelated? And the answer to that generally is no. Again, these tests are facts and circumstances. So it could be difficult to say absolutely never would it be subject to unrelated business income tax. But in a situation, especially where there's a religious component to the curriculum, I think you are going to be very safe. having a preschool and not filing a 990T. There are some exceptions here. There are some exceptions in that there's a $1,000 safe harbor, so you can have some income, but if it's less than $1,000, it's not a problem. And rent of real property, there was a question about this earlier, is if we rent it, do we then have unrelated business income tax? And it's complicated. Essentially, rent of real property generally is not subject to UBIT, to unrelated business income tax. However, if there are personal services associated with that, so for example, if you've got a janitor who also cleans and that's included in the rent, or if you provide other services that's not really associated with the typical rent of real property, it could become taxable and subject to UBIT. Additionally, rentals can be problematic if the rental space can be problematic if there is debt on the property. So if there's a loan on the property, if there's a mortgage on the property, it can cause a rental that would normally not be subject to UBIT to become subject to UBIT. I do have to say, I'm not doing a full seminar on UBIT. I'm not the person to do a full seminar on UBIT. This can be very complicated. And the law on it actually has changed substantially in the past couple of years. So if you think you are subject to it, find a CPA in your congregation or a tax attorney and try to get an opinion from them. Additionally, examples. So if you have a parking lot on your church that you charge a fee for, income you receive from your parishioners or from your members when they come to church on Sunday, that is not subject to UBIT. But if you receive parking fees from the general public who Monday through Friday park their cars there when they go to work, that would be subject to UBIT. Sale of merchandise, if not substantially related to exempt purpose, that could be subject. So again, Bibles, you're a church, you can sell Bibles, that's not subject to UBIT. But if you are selling something else, T-shirts with the logo of the church, that's probably okay. That's okay. But if you're just selling random T-shirts, that could be problematic. Also, selling ad space in bulletins is specifically identified by the IRS as something that they would go after. And once again, on the UBIT side of things, it's complicated. You're going to want to talk to a CPA because this is an area that's changing constantly. So I think that is the end of what I planned on the presentation. I do see I've got a question here from Carol Saki. Oh, was there? Okay, sorry, I thought I heard something there. Bridesburg UMC in Northeast. We are one of the churches that got hit with thousands of dollars in real estate taxes a few years ago. We'd eventually returned our money. I'm not sure what that.
Sorry,
Yeah.
I was trying to listen to you and type at the same time. So we eventually, after much angst and everything else, did get the money back from Philly, but we had to pay thousands of dollars to them. And as a very small church, we were luckily had people that donated it. But the minister eventually, she initially went to the legal department and we gave them all our information. And, I don't know who was spoken to. I think this was about 3 or 4 years ago. And we were eventually told they couldn't do anything more for us, which meant they didn't really do much to begin with. And luckily we have a gentleman who's not a member of our church. He's in charge of the volunteers for our very large food pantry. He's the landlord himself. So he really dug into it. And finally, what they had done was take the exempt thing off of our church, that we were no longer exempt.
Mm-hmm.
And now I understand there were many churches in Philly that went through this. But we were just wondering, we were told to, contact a lawyer that might help us with that, but as we could not afford that.
Mm-hmm.
So that's why I asked about the role of the legal department for legal issues like this, are we supposed to come to you, or are we left that we have to deal with it ourselves?
Yeah, well, and that's a good question. Just to be clear, there is no legal department though at the conference, right? All there is me and my predecessor, Rob Shoemaker. So this might have been something I handled or something that that Rob handled before I came on. But to answer that question, I mean, generally myself, I represent the conference. All right. I don't represent any individual church unless they engage us to do so. That being said, I like to, and I think the bishop wants me to be available as a resource, at least to point people in the right direction on these things. So, essentially, I try to, I try to be available on that. But again, my representation is not of individual churches.
Okay.
So, and again, I don't know the specifics in yours, but I know for one of the churches in Philadelphia, they were able to find an attorney to help them. And I helped that attorney kind of understand this because, some attorneys, they really do. They think you're a nonprofit, you should be tax exempt. But we just talked for an hour and a half on how that's not exactly the case, right? You've got to find one of these exemptions. So,
Right.
So as far as that's concerned, generally my engagement with the conference does not cover going to court on behalf of individual churches.
Okay.
But I certainly don't want you to think that means you can't reach out to me.
Right, exactly. Okay.
Because I do, and frankly, especially with this issue in Philadelphia, I know I was also at one point able to connect churches that were having similar issues, so that they could, discuss this amongst themselves and come up with more of a unified plan. Because there was really a moment of panic there when the city of Philadelphia sent these out, and a lot of our churches claimed either not to have received it or just didn't receive it or didn't act on this notice. And then it's an uphill battle. Rather than saying, yes, we'd like our exemption, please. It's a, well, please reinstate our exemption situation.
Okay.
Matt, I
All
want
right,
to thank
thanks.
you so very much for taking the time to lead this workshop. We're come to the point where we need to jump off to get onto the second one.
Of course.
For all the participants, you will receive the recorded as well as Matt indicated, the PowerPoint. So thank you. Please share this information with particularly your trustees and your leadership at your local congregation so that they can also be well informed. Again, Matt, thank you so very much. I know that you're a busy person. Appreciate you.
And like I said, sorry if I got too legal geek. I like these tax issues.
Actually, I like legal geek. I wanted to be a lawyer before I became a pastor.
Yeah, and to Andrew's point, I just really am glad that we did this. I mean, one of the things I was reminded of as I realize I'm as old as the hills here, but the bottom line is there was a time when we used to have seminars for pastors on the clergy tax things and stuff, and this just reminded of how absent that has been and what a loss that's been. So maybe Andrew, I don't know if that's something on the cabinet you can rediscuss that. And the other thing on the planning side of this was incredibly beneficial. What was sad though, and maybe there's no way around it, but for I know at least a couple of us, we're pastors and we signed a covenant with our SPRC saying that we would attend the training provided for PPR committees, but it was scheduled during the same session. And in my case, as it is in a lot of small churches, I kind of am it. I'm the janitor, I'm the, everything kind of thing in a sense. And I wish that could have been maybe noticed and avoided, but maybe it's totally impossible.
Not at all. See, I'm just going to say this real quickly because I need to jump on to the next one.
Right.
This, because of pandemic, we need to be flexible and creative for this particular set, if you will.
Gotcha.
But each district superintendent have committed that if churches want a small individual trustee, SPRC, finance committee, we will come and do that in person if possible, as well as via Zoom just for our district churches. But this was for the entire conference. So that has not gone unnoticed.
Okay. Thank you very much for that.
All right. Thank you all again, Matt. Thank you. I'm going to jump off and go to the next one.
Glad to help. Thank you.
All right.